Hi there, a very good morning, good evening to all of you, depending on wherever you're watching me. This simply Stocks, and I'm live after a long while in this live session with you all. And hopefully, you all are doing well. And today, in this live session, we are going to discuss about the markets, how the mid cap and small cap are faring out, and where are we headed from here? Are we headed to those 2022 lows or not? So, we're going to discuss all that. But first of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should that with their own due diligence and research. And I'm not in favor or against any company that I talk about. So now, in this session, basically, I'm going to discuss in detail about what happened in market today and probably how long this type of you can say downfall that we are seeing may continue, and which are the sectors now to look at, probably where you can find a lot of value in. So we'll discuss about all those aspects, all those points. I hope you all are doing well. I hope everyone in your family are doing well, and let more people join in, and then we will begin this session in earnest. So good evening, Mr. Pawar. Amit, hello to you, and hope you're doing well. So before I begin the session in earnest, a little bit of talk about sports. It has been a while since I have been online with you all, and there have been a lot of, you can say, things happening in sports. So basically, the Border Gavaskar Trophy series is over. India won the series 2-1 expectedly, but the final test was a dreary draw. So basically, what has happened is that the BCCI may have gone ahead with a notion that let's go for more of a draw kind of a wicket, so that we end up winning the series. But the wickets overall in this test series, in these test matches, weren't, I would say, up to the mark, to be frank. So this should have been a result-oriented pitch, which it was not, and eventually Australia did play out a draw, and so India win the series 2-1, and they, with the fact that Sri Lanka lost to New Zealand in a cliffhanger. Uh, Now what is happening is that India will play Australia in England in June for the World Championship, World Test Championship. That's what I'm talking about. And we have the World Cup in November as well. So there are two big events now for India. Now, thing is that at the moment, with nothing happening in the market, with whatever the selling and mayhem taking place, it's better to just divert and get into your indulge into your hobbies, etc., if you are not in a situation of life and death with your investment. So watching a lot of sports at the moment, and what I feel about the market is that it's as simple as this. What happened in US is nothing small. I won't say it's huge, but right now the thing is, the market is in a tailspin, and there is one blow after the other that it has taken since the European war that we saw, the Ukraine thing that happened in February 20 and 22, sorry, February 22. And over the last year or so, over the last 13 months, things have not at all been good. And I want to just, I don't want to spoil the party or spoil the mood even more. But I want to just bring in one more point, is that there have been 4 or 5 very good, you can say, agricultural season or monsoon season that we have had. I think this time around we could end up being disappointed, and so that's another thing to look at over the next 3 4 months. So maybe that July rally that we always talk about, this is another factor that we have to look at, and before getting into theme stocks, say getting into Coromandel, etc., or agri theme stock, etc., they might not play out this time around because of the kind of environment with respect to a rural economy, with because of the kind of environment with respect to the monsoon, because we have had 4 5 clean monsoons altogether. There had to be one year where the monsoons dip, and this could end up being that year. So that's another point to take note of. But overall market has not done that well, and it seems like this may just linger on. So, Amit, your question is any relief this year before elections? Yes, I feel a rally is possible post this correction. Now, how long this correction will continue, we don't know. Uh, but at the moment, at 17,150, we could see a bounce of 100 points towards 17,300. But after that, we could see a decent fall towards 16,700, and probably that is some level around 16,700 where some sort of some semblance of buying that could come in. 16,700, 750 are decent levels for somebody to put in money for long term. For shorter term players, for somebody who is putting in money for 6 months or less than a year, you need to wait out before this dust settles. We have the FOMC meet on the 23rd and 24th of March. We have an emergency FOMC meet that is, I think, today. Let's see what Jerome Powell ends up saying, and will that make the market go up? We'll see what happens with that. But I think the market is looking at something else. I believe that the market, now this is a very difficult thing for Jerome Powell, and that is why I believe that we could be in a situation where even 15,700 could be tested. The reason for that is at the moment the Fed is in a very difficult spot. It is in a catch 22 situation. So basically, if if they say that they'll raise rate at 50 basis points and continue to do that, they have to cut inflation. Then we have all this issue of this SPV bank and everything, SPV bank, and all that is happening. And so if people are losing money and there is higher inflation, and there are millions of you can say dollars going away because of these banks getting hit. So if the Fed keeps on their path of increasing rates at 50 basis points, the market may not like it, because the market would want some kind of relief on that front, because of the fact that currently there are at least 3 4 banks that are under the cosh. Second thing in here is that what if the Fed says that okay, we are not going to increase the rates at that pace, and we are going to do it slowly, gradually, 25 basis points, then the market will not like it, because 25 basis points will not help the inflation of 8 10%, the retail inflation or the food inflation that we are seeing there, to come down. So in that case, the Fed needs to increase rate even more, or stringently over the next 2 3 sessions or 2 3 sittings, rather than reduce the rate further. So it cannot be this way or that way. They would have to come out with some sort of a solution. There have been a relief package that Janet Yellen has talked about. Things will settle down, but it's going to take time. Basically, that's what I want to say. And the markets don't like uncertainty. So what if the Fed comes up and says that okay, we were planning to do 50 basis points, we may not do that, but the number of increases in terms of rate hikes may increase. Even that will not suffice the market. So I feel that overall what is happening at the moment is that the correction that took place today is just the precursor of a bigger correction that we could see. It's not the end of that correction. That's what I mean. So we could see a 200 300 point rally tomorrow or a day after, and the market may look like bottoming out at 17,000. But after hitting 17,300 350, we could see a good 6 700 point decline at least. So overall, today is Monday. I think by Thursday or Friday, we could see that bottom of 16,700 800, or by next week, early next week. But what is really to be seen is that how this, you can say, all this trouble of the banks in US is going to be tackled by the Fed and by the government, etc., or by the financial institutions there. That will really signify as to where the market would end up bottoming out. So as far as the market is concerned, as long as the uncertainty remains, the market is in trouble. and I feel that today is 13th, so over the next 1 week there could be a lot of volatility. Another point I want to make here before we come to the question and answer part of it is that you need to look at a lot of factors when you look at such markets where there are deep corrections and then upward movement and then corrections. You need to look at volatility index. So what happened with VIX was that it was trading around 12, 13, 14, around between 12 to 14 and 12 to 13, and around that even dipped below 12 a few weeks back. And that's extreme, you can say, calmness in terms of volatility in the market. That doesn't sustain for long, and exactly the same happened. So today it shot up from 12 to 16, even 17, and then dipped below 16. So I have a feeling even the VIX are not that up. So the volatility is not that great even now in the market. I think we could be headed towards 23, 24 on the volatility index. And that volatility or huge volatility that we'll see then will only, you can say, result in the market bottoming out, because there will be a lot of selling. If the volatility index goes to 23, 24, that means a lot of volatility would be in the market, inherent market. And especially to tell you frankly, or to put it straight, there'll be a lot of selling, huge selling, panic selling that will take place. So we are coming to that. We have If you look at the ranges, we have gone from 15,700 800 levels, sorry, 15,300, and then we went to 15,700 800 for a while. And from there on in, we have taken on all-time highs by moving 1,000 points each time. So 16,800, then there was a correction, and then we moved to 17,700 800, and then there was a decent correction, and eventually we went to 18,800, and then the correction is continuing. Now that band of 18,800 would have a, you can say, a lower band of 17,800. Now that 17,800 is taken out, 16,800 is the next pit stop. For some reason or the other, if that goes, so somebody who trades may take a they call at 16,800 whether to go for buying in the stocks or not. But for some reason, if that fails, and there is a possibility, I think at least a 30% possibility that even 16,800 will go, then we are looking at 15,800, 16,000 levels. At that point of time, remember that the Nifty EPS for next year, FY24, would be closer to 800, I think 940, 950 rupees. Based on that, at 16,000, we are at a situation where we'll be trading at only 17 times earnings, which is on an average, you can say, a median earnings, median PE for the market 17 times. So at worst, we could see 16,000 on the index. At best, we could see that the market bottomed out today, which doesn't look like. The way the selling took place even in the last hour, it doesn't look like that the recovery will be so quick. So we should look at a 400, 500 point decline from here, 300, 400 point decline. And then probably after you can say, bounce of around 400, 500 points, we could even break 16,800. That's my assessment. All right, guys. Thank you. Thanks a lot. And now I'll open the forum for you to ask queries. Please use the super chat and super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Again, a disclaimer that I am not a member of NSE and BSE, and that I am not authorized to give portfolio advice. But then this is all for educational purposes and to guide you forward. So let's begin this session of Q&A. So the question coming in is about DVs. DVs and HDFC Life broken 200 DMA in monthly chart and looks attractive. See, if they have broken 200 DMA and 50 DMA, then don't get into the stock even if it is looking attractive, because the stock could easily go down 15-20% from here. Let these stocks settle down. These are very good companies. Both of them are decent companies to invest into. But let the market settle down and then get into the stock. Again, Divi's Lab, one can start accumulating, but I'm not saying that these kind of stocks will perform okay. So I wanted to discuss one more thing, that if the market falls and we are seeing that 16,800, 16,000 comes about, then which sectors look good? So there are two, three sectors to look at. One is the PSE space, public sector enterprises space, with your ONGCs of the world, Oil India and everything. And then you need to look at the cap goods space, where there are companies like ABB, Larsen, Siemens, all these even smaller companies are there in the capital goods space. I think this space has not done well at all, from a 4, 5, 6 year point of view. Before 2018 it did a little bit, but after that the industry hasn't done that well. So I feel that this is one of the stock to look at, capital goods, sorry, sector. And the third is infrastructure. So it is a completely different tone to the market. These three sectors could end up doing extremely well and could perform extremely well as we go along. Whereas if you look at consumers, pharma, uh, FMCG thing, or consumer durables, white goods, I mean they will struggle. Even most of 90% of the pharma companies will struggle, and that's what it is looking on the charts. Okay. What about Venky's and Mastec, both 50% down? See, Mastec Sagar looks good, but I won't suggest that you just jump in and buy big, but you can probably have an eagle eye on it. Once it crosses 1900, it becomes a big buy, but at 1600, if you have bought at very high valuations, you can probably average here. I don't see a huge downside from there. Venki's, I would say avoid. There are issues with the industry per se. Uh, uh, Probably you can avoid the stock altogether at the moment. Okay. Travel freak, yes, you can definitely hold a VIP for long term, but the thing here is that these companies, mid cap companies, may continue to give you heart attacks or give you very difficult time. I'm sorry to say heart attacks, but give you very difficult time. In these times you would be on your toes all the time. So probably at this point of time, I hope you people understand that in these difficult times, do not put in a lot of money at this point of time. Probably wait it out, let the market settle down, and then put in the money. I think there is more downside to all these companies, and that's why probably better to have investments into strong mid cap, larger mid cap companies, rather than into smaller mid cap companies and have your health hurt going forward. That is the point. So that's the point. So that's my point on VIP. It is a good long term pick, but you need to have the gumption to see 30-40% downside, and it should not affect your health. That's the only point. I hope you understand. So, Shriram, there are you can say developments in sequence, and the stock has moved up from bottom, but we need to see numbers. If the numbers keep on, you can say, depriving us of profitability, then there's no point looking at the company. So first, I'll look at the numbers and only then make up my mind as to what needs to be done. Why is Kilpas not picking up even after good results in last 2 quarters? Well, Ravi, it's difficult to say, and that's what happens with smaller stocks, less than 1,000 crore company, less than 5,000 crore market cap companies, is that these companies look like trading at very attractive valuations, but nobody go ahead and buys it. Very difficult to find out a lot of information about them, and so the only thing you can do is just hold with a deeper stop loss, say a stop loss of 360, 350, 360, and just keep on holding on to the stock. There are a lot of developments that are awaited for the company, triggers that are awaited for the company, so hopefully it should end up doing well. Okay. So Tanla platforms avoid at the moment until some strength is seen on the charts. Although the business is fine, but the stock looks like extremely weak at the moment. So Jubilant Food looks good after such a correction. I think Jubilant Foods looks good here. So one can definitely accumulate. Uh, See, from current market price, Mr. Pawar, I think 47, 47 and a half is a possibility. Another 10% from here is a possibility, and that could happen if the market falls another 2 3%. I think Zomato can fall another 8 10%. So, if the market heads towards 16,500 or so, I think you could see Zomato at 47 as well. So, Ajanta soy I don't track, so I won't be able to comment much. Again, GTPL I don't track, so I won't be able to comment much. See, Adani will buy if you have bought, hold. If you have not bought, then probably avoid the whole group altogether. And if you are ready to take a volatile risk, yes, Adani Wilma, Adani Ports, Adani Transmission are good apart from other companies. But again, no recommendation and do your own analysis. Tata Consumer is is a complete avoid. Uh, the numbers are fine, but valuations are stretched, and the market is not ready to give very high PE for this stock because the growth is only 15%, 18% in that range. Again, Ashish, happiest minds to me at the moment avoid IT, most IT. Even if you get in at these prices and the prices do not fall, you will not be able to make money because the any kind of movement upwards will be sold into by people holding on to the stock at higher levels. So PNB, I would say I don't track, you can say public sector or any kind of banks. I won't be able to comment. Overall reality, Aditya looks good. One can start accumulating. I think that could be one stock that could do well once the tide reverses. And look at the PSU space, not the banks, but other stocks. Look at infrastructure stocks, look at capital goods stocks. Uh, Look at gas stocks, they will continue to do well. So on declines, they can be looked at. What will trigger the market to go up? There has been a time as well as a price correction for a long time. That's what Check 3 Man has asked. So uh, there are two ways to look at it, Check 3 Man. You could say that the correction has been continuous since February last year, and things have gotten very bad, or you can even look at October 21 as the benchmark and the correction taking place from there 17 18 months. But what I have seen is that in June also we had very deep correction, and from June to December we had a rally. Not many made money, some made money. So uh, I have a feeling that this is not something that is going to go away in 2 3 days. Uh, I believe that something positive with respect to market and negative with respect to inflation may trigger a rally. That means probably pausing the rates. I don't know, but it should take something extraordinary for this market to reverse sustainably. Otherwise, I see 200, 300 points rally being sold into, and then the market going down 5, 600 points from there. What I mean by that is that if the market is closed at 17,180, 200 at the moment, we could see 17,400 in the next couple of days, and then massive selling towards 16,800 or so, and then the same equation continues. So lower highs and higher lows is what this trend is seen. And probably I think instead of asking what will trigger a market reversal, I would say you can say that where the market could find a bottom. I think 16,000 is somewhere where even bad news will be priced in, and if the bad news comes in, then there will be heavy buying. So 16,000 for me is that level that you should look at in a medium term time horizon. But 16,800 is from where I expect a bounce, a meaningful bounce in the market. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.